Everyone, this is Rob Roy of Elliott Options, and welcome to this week's TradeFinder Live. For those of you that are new with us, let me give you a quick rundown of how this works. You've been with us before, you know the story. First of all, we have this disclosure/disclaimer that we have to go through. If you are brand new, please take a screenshot of it and read it in detail in your leisure. I'll give you a couple of the highlights that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And because we have a lot of international viewers, a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars, unless noted otherwise. The rest of it, again, read when you have an opportunity. So the way the TradeFinder works is we'll go through and do a little bit of talking about the market. Obviously, it's been a bit wild over the past few days, kind of unusual for where it sits. So we'll talk about that. We'll talk about some of our trade alerts that our subscribers enjoy, and show you a little bit of the website, what you can expect as an alert subscriber. Then we'll go back and review any of our previous case study considerations with TradeFinder, and then we'll look to see if we can find another one for this week. If you've been following along past couple of weeks, just like they have been since we started TradeFinder, are doing really well. And then with whatever time we have left, we'll open it up to some general Q&A at the end, which is usually you guys giving us your favorite stock symbols, and we show you what our indicators have to say about those. So with that, let's go ahead and move forward. Before I start talking too much about the market, a couple of housekeeping things that I wanted to mention. Final reminder, next week we start Zigzag Mastery. So it's only a week away. If you haven't registered, you need to hurry up. There literally are only a couple spots left. That's not marketing hype or anything. That's literally the truth. So if you want to join us, please do so. You can register at our website, or ask the guys if they'll put a link in the quote box. I can promise you it's going to be, I mean, the stuff is really, we've been going through it. It's just, it's a really good class. And this is one that I'll certainly have a lot of passion and emotion behind, because the zigzag's my favorite directional trading pattern. So it'll be great information, stuff that I'm sure you haven't seen before, even if you call yourself or feel that you are an Elliott Wave aficionado. There'll likely be some new things in there for you. And then another interesting for me at least, is having a Q&A, webinar kind of interview with Guy Adami of CNBC Fast Money fame. He's always on each day at 5 o'clock Eastern time, and quite often on the lunchtime show. So you can go to our website, ewotrader.com, and look for their picture and register there if you'd like to attend the webinar live. We're going to talk about some interesting subjects. So, all right, well, those things talked about, let's go ahead and look at the market real quick. And you can see that we're still at that 123% extension in the wave 5. Now, we talked Thursday night at an insiders meeting for our subscribers. We do that every week, where just for our alert subscribers, we have another webinar like this, a bit longer, but same type of thing, where we go through and look at each and every one of our alerts. And with the volatility moving back and forth, some alerts are profitable, some are not right now, depending on which way they're looking, whether they're the strangles or directional trades, etc. And I just wanted to further a conversation with you guys that I had with them, for the market in general, that most people are long the market. So if you're long and you're concerned about what's been going on, here's a couple of things to note. One, you can see that we had these little bars moving up to the upside here. And then as we move into this test that we're doing of the 381 level, so I didn't think I was going to have to draw this anymore. You've heard me say this numerous times, but it really showed. If you're watching this, if you've been a TradeFinder attendee, and you haven't subscribed yet to our alert service, because maybe you're just not quite a full believer in Elliott Wave yet and the power of its predictive capabilities for directional movements, then I don't know what else to tell you. we talked about this 381 level for the longest time, and it has just been an absolute magnet from a support resistance standpoint, both ways. We've broken above it and we can't get too far away from it. We've broken below it, still can't get too far away from it. We're going back and forth. The market doesn't even know what it wants to do. Now, a couple things to note. What I was starting to say earlier is we have these little bars here, and obviously there was very little intraday volatility with those small bars. And then we've had a succession here, 1, 2, 3, 4, 5, 6 days in a row with pretty decent volatility. And an old expression, lots of old expressions in the world of trading. Usually old expressions become old expressions because they work, right? They stand the test of time if they actually become an old expression, is that volatility marks market bottoms or market tops. So basically what that means is with this volatility here, we're either going to use this 381 level as a platform. It's not, I don't want to use my launchpad effect thing because this is not what the launchpad effect looks like. So I don't want to use that analogy in this example, but it could use this level as support to run up basically to this 420 level. And I heard some forecasts today on the financial networks of 460. I don't really see that, but who knows? If we hit 420, we'll reevaluate and see, what the charts tell us at that point in time. So just because they're big bars doesn't necessarily mean that it is a market top. We could be starting a new run. However, we also have to respect the fact that this may not hold. It's tried to bounce away from it and it couldn't. Yesterday was a very impressive day, one of the best days the market's had in a very long time, and we got no follow through today. In fact, I was watching really intently into the close today to see if we would hold the 10-day moving average. Now, we closed just below it. And I know you could say, oh man, you're splitting hairs now. And maybe I am, but technically we closed below the 10-day moving average. I wasn't so concerned with the fact that we didn't get the follow through of a new higher high, which would have been fantastic if it would have occurred as far as a continued upward move. So yesterday was so strong that if we'd just gone sideways today, that would have been okay. But we just, right at the end of the day, just selling into the close, and it did break below that 10-day moving average. So I wanted to see it hold that. So that means that we kind of have to forget yesterday was great, and for people that are long the market, and then reset and say, all right, we start this watch process over again tomorrow and see what happens. At this moment, the futures are up 7. So that's nothing, as you know, with the volatility. So just call it flat at this point in time, not giving us much of a directional bias one way or the other with the futures. Now, another thing that I shared with our subscribers Thursday night, and this is true, it's been a long time since we've had any sort of a sustained downward move. It wouldn't be so bad to have that because the market moves down rather quickly. When I get to the end, when we start looking for a case study for this week, I'm going to show you that there's some really cool things in Profit Source. They're adding new stuff all the time. And there's a couple things that I want to show you. We have alerts that are set up, ready to go. They would have gone out today if we were going to have a confirmation day, but they didn't. We did do one thing, which I'm going to share with you tonight, because I think everybody needs to be thinking along these lines. But even if we break to the downside, we have stuff ready to go as well. So it doesn't really matter that much which way things go. Now, we currently have long directional positions on. And if we break to the downside and we start down and the first stop is going to be at least here, it would at least be a move down to the 61.8% extension, which also has the added support as being the top of that A. We've talked about this numerous times. So that's a pretty significant move to the downside that we could take advantage of. Now, if it breaks that, then it really gets interesting to the downside. I mean, anything is open at that point in time, including retracing that entire wave 5, as you know, is one of the rules with Elliott wave, back to the previous 4. Although when you have a wave 5 that extends more than 100%, which we have, you actually look for a 61.8% corrective move. So we haven't really talked about that. So I thought I'd go ahead and show you that for something new. So let's do just a fib retracement of this wave 5. If we're done and we move to the downside, that brings us down here to 334. So that would be a support level right in front of these two bottoms that occurred back in September and October. So that would make a lot of sense. So basically what we'd be looking at is something along the lines of a boom, probably a little bit of support at that point in time. And if that doesn't hold, then down here. So easily could see a zigzag pattern, something like that to the downside. We're not there yet. We have to break 381 and do it with follow through so that we have the confirmation. But just to illustrate the fact that we're ready to go regardless of what the market decides it wants to do. Also important to remember that this zigzag pattern's target was 381. It did that. What we're trying to find out now is this an extended C wave and an extended wave 5, which would both hit virtually the same spot at 420, which makes that another major point of resistance, which is why I'm not quite sure that we go much higher than that if we get there. So those two converge, which again gives us a point of resistance on the market moving to the upside there. So the market's going to do what it's going to do. Does it extend, or is that it? So I just want to reiterate when the market is doing this, that we have to remember and keep that in the back of our minds, that zigzag pattern that the market had completed. It did what it was supposed to do. So now we just find out, do we extend or are we done? And we start to correct back to the downside. And there are plenty of opportunities, as I said, when I get to the pre-computed searches and we look for a case study consideration for tonight, there's plenty of positions, and I've got my favorites all mapped out already. I was doing that today. In addition, as far as looking for things when you could see that the 10-day moving average wasn't going to hold. It was interesting right into the close. We kind of had a bounce and then sold off right into the close there to break the 10-day moving average. So it looked like other people were watching it, and the longs were like, we don't want to give that up. And then some selling pressure came in right at the end and moved it lower. So yeah, you can say that, all right, this is a little bit of backing, not a big deal. It's an inside day. So let's spread the chart out. And for those of you that may not have heard that term before, a lot of you have already, but just to explain what an inside day means, the high of today was lower than yesterday's high. The low of today was higher than yesterday's low. So the entire bar for today's trade was located within yesterday's. So usually when you have an inside or an outside day, which they both exceed the previous day's high and low, it means that it's a similar signal, not exact, but a similar signal to a doji, meaning indecision. And quite often after an inside or outside day, some sort of a directional move occurs. And so tomorrow is already going to be meaningful anyway, based on what happened moving into the close today, but that just makes it even more so. So we'll probably get an idea tomorrow of whether or not we can put some distance. Obviously, we really need to break this high to feel pretty confident. And it's not that far away that, the confirmation is there and we're heading up to 420. So, it's, we talk about expanding triangles, and you can look at this. That's really not a pattern that's talked about very often where you see something like that. You can almost say it's a bit more of a backwards diagonal where you're looking this way. But, that's, again, we're just trying to find a pattern that really isn't worth wasting that much time when we have such an important level of the 381 as our target. And you can just see by this building volatility intraday that the bulls and the bears they're fighting it out right now, and we'll see which one wins. But to me, it's just going to be interesting to see which way we go. But from a trading standpoint, there's so many positions to go in either direction. It doesn't matter that much. So that's the market. And if you have questions, go ahead and put them in. But I'm going to take questions at the end, even if they're regarding the market. Because I lose my train of thought if I pause and get questions. So we'll do all those at the end, plus the material that I want to get through. I want to make sure we get through that and then spend whatever time we have left at the end going through questions. But if you have questions about where the market could go from here, then go ahead. I did want to mention that one of the subjects that we're going to be talking about, myself and Guy Adami tomorrow, is gold and Bitcoin. So is Bitcoin having an effect on gold? What's going on with gold? Why isn't gold reacting to all its indicators? So if those subjects interest you, then again, love to have you listening in to the webinar tomorrow. All right, so that's it. There's really not much else to say about where we are with the market at this point in time. We could do one other thing that we haven't done much of lately, is switch over to the weekly chart. But as you can see, it's kind of just giving us the same thing. Now, right now we have a doji, but remember, we're at Tuesday, so that it's a weekly chart. That doesn't mean anything yet. That's likely to change between now and Friday. But if we did close with a doji right on top of that 381 level, that would be quite interesting moving into next week. But also look at right here, this wave 5 target. You see that? Where have you heard that number before? So that's interesting, isn't it? That it coincides, this potential wave 5 target in the tap box coincides with the 420 level on the zigzag extension. So you like it when there's more than one Elliott wave pattern that gives you the same target. Obviously, that increases the percentages of that occurring. So we're still in a wave 3. Let's look at the DMI on the weekly chart. The ADX is still strong, although it's moving down. But what doesn't look good is the fact that the positive directional indicator has been moving down for the past 2 weeks. Moving into this week would be the third week where it's just, 2 months. Moving into this week would be the start of the third month. And so that's not something that's too encouraging as far as the momentum to continue higher. But when you look at the weekly chart, it doesn't look bad, does it? I mean, we just broke above that level. We came back down here. So when you take all those bars out from the daily chart, the weekly actually looks a little stronger as far as the potential for a continued move. So maybe it's a point in time where, we might have got a little spoiled with the market just running straight to the upside like that. And this is going to be a little bit more normal. So what is the new normal? That's what I want to move into. And I think there is a new normal, and that is market rotation. You've heard us talk about that quite a bit. There's a monetary rotation. So one of the things that we did was we added there a new case study for our subscribers on VTV. So you can see it right there on our screen. This is our trade list. This is what our trade screen looks like. It lists all of our open positions. So VTV is Vanguard's value ETF. And I think that value is a good place to be. So you can see that it actually did go out as an alert for our subscribers today. So coming back over here and looking at the chart of VTV, value is one of the places that money is starting to move into. And you can see that, well, yeah, we had a little blip at the end of last week like the market did in general, but not much. So it didn't move down too much, and we came back another inside day today. But if we put the Elliott wave pattern on, you can see that it hasn't extended as far yet as the S&P. So this is what happens when money rotates. People look for where areas that are still strong but may have underperformed. So if we go back and look at the SPY, it's extended 123% on the wave 5, but value is only 103%. So it's underperformed. That's where money seeks to find where's the next potential area where we could outperform the regular market. So it kind of is, it works, in concert, doesn't it? Because you're trying to outperform the market, and if money leaves and moves into other sectors, the other sectors that have been driving the S&P, then it's easier to outperform, right? So they kind of work hand in hand, is what I was trying to say before. But if we take a look at the DMI here, that's a lot better looking, isn't it, than what we have in the regular market. The ADX is actually trying to tick up. Yeah, we had a little downward move in the positive directional indicator today, but there's good separation here. And so if we take a look at volume, you can see that that's pretty good volume went in there today. Now there was a little bit of volatility here right at that 100% extension on the wave 5. And then if we take the volume and the DMI away, you can also see that, you know, it's a pretty good Elliott wave pattern. Now, one of the things that we should talk about here is, let's take a look at this wave 4 here. Doji at the end of that wave A, so that looks great, right? And then we come down here, and that was a 100% corrective move. So is that a zigzag? Hopefully you said no. So what does that tell you? Well, it tells you that that was a flat. And so we had this flat here where we had an A, B, and the C completed here. And on completion, there we went into that bit of a launch pad looking effect. And with that doji that occurred right there on the 18th of February, that would have been the end of that launch pad. And then we started moving higher. We got a little bit overbought there on the 24th. And so we came back down with a little bit of the scare from interest rates, which have backed off, by the way. They're much calmer. It wasn't the fact that the 10-year went above 1.5. I mean, you think about it, 1.5 is still extraordinarily low. It was the speed in which it did it that was catching the market off guard. The fact that the interest rates were going vertical, and then you become, well, how far is this going before this runs out of steam? And luckily, it wasn't too far above 1.5 to where it kind of ran out of gas, and so everything has calmed down a little bit, and now we're back to letting the market forces work for it. Congress is getting close to passing that massive stimulus program, but I really think a lot of that, I don't think that, I mean, we may get some short-term bounce out of that, but the market looks ahead. And this confuses people always with, why is the market reacting the way it is when news comes out? There are news events that move the market, but normally that's because those are unexpected news events. So when a news headline really moves the market, it's because the market hadn't already factored that in. But when there's things that have been going on for a while, like this stimulus package, that's priced in to the market already. And the market, I mean, the reaction that could occur from that is, if it wasn't as big as expected and they backed way off and passed something that was a much smaller package, well, that would be detrimental to the market, in my opinion. And we could have seen a pretty significant sell-off on the news of the stimulus being passed, because there's already expectations that a lot of money is going to be coming in to the market. Now, we should get, looking ahead is one thing, but buoying with the money and people using it. Last time the stimulus came out, statistics showed that a lot of people put it to work in the market. So, that could drive things higher with that buying, but I don't think it's just going to be this big, massive move to the upside with the fact that it's already factored in. Another thing to remember about yesterday that plays in is, yesterday was the first trading day of the month. So I didn't put a lot of weight into what happened Friday, because that was the last trading day of the month. And people were pairing off positions to show their performance, get their bonuses, etc. The big one comes at the end of this month. Quarterly is when a lot of the bonuses come out, and they really look for performance. But yesterday was the first trading day of the month, which is when institutions put new money to work. So we're sitting right on top of, 380, and we have the first trading day of the month. Having an update yesterday was not a surprise at all. In fact, I had posted a note in the commentary section on our website to our subscribers that, the futures were up, and it was a new money day. And the important thing is not the fact that we're likely to open to the upside, but can it hold it? And can we hold the gains? And we did. We held them all the way into the close. So and built on it. So that was a big positive for the market. So yeah, and Friday being the last trading day of a month, Monday being the first trading day of a new month, kind of cancel out each other. But yesterday won, right? I mean, yesterday's up day was far bigger than Friday's down day. So all those things are going on with the market, but I wanted to share that with you that value, I think, is a good place to be looking moving forward. We also have VLY, consumer discretionaries, is a good place to be for rotation as well. So those are two places that sectors that we're going to be looking for and are looking with our new alerts. You want to be where the money is moving to, and maybe lighten up a little bit on where money is moving from. Now, if the market moves to the upside, those big tech guys, they're going to go higher. They just will. They'll go higher with the market, but they're probably not going to be the drivers of the market they were. So they can still have good upward moves, but I mean, there was a time when there was like 5 to 7 stocks were driving the entire S&P 500. And I just don't think that's going to be the scenario anymore. I think you're going to find outperformance in other places, and that's what we're doing, and that's what we're looking for. So wanted to share those things with you. All right, let's go back and look at our previous couple of weeks, and back on the 16th of February, we had looked at Walmart. I showed it to you last week, and it made a nice move. And if you were still in it, holy cow, look at that. What a massive break to the downside out of that triangle. I'll go back and show you the 16th. But if you follow this one and you haven't gotten out yet, I have no idea what you're waiting for. But there's one. There's the 16th. That's when we looked at it right here in TradeFinder, and then bam, that's where we are now. That's a massive move. It's a bigger move than I thought would come out of Walmart. So huge move, and it's still in a wave 3 to the downside. It may not be done, but if you look at the 10-day moving average, you're starting to get to a point where, okay, we're getting just a bit oversold here. They really didn't do much yesterday with that big move to the upside yesterday. It only finished up a point and then gave it all back today. So right back down, but just a touch to the oversold side here. So maybe we go sideways a little bit. Maybe it bounces back up to the 4. It's got this gap that it has to fill. So it's hard to see what happens with Walmart from here, whether that wave 3 continues or a bounce. But that one, I'm calling that one good. I'm saying that one's done. We're not going to look at that one anymore. If you were following it and you're still in it, you're just being greedy at this point in time. And then last week we did ENBL. We looked through that, and I said that was likely going to go out as an alert to our subscribers, and it did. We sent that one out as an alert to our subscribers, and so here's where we are now with ENBL. They've gotten overbought. Walk back over here so you can see that very next day, boom, to the upside. So that was a really good start, right? The next day, and then back up a little bit because we had gotten some separation with the 10-day moving average, and then back down to take a look at it, and then back up, and a little separation there. These lower dollar stocks, you don't want to see those vertical moves like you were seeing in the the Reddit craze and all that stuff that was going on when things were going vertical, because what happens? They go vertically up and then they come vertically back down. Well, we don't want that. We want the gains to hold. Little bit of a triangle here. I was wondering if anybody saw that. Be curious if anybody noted that. Remember, we comment often that Elliott in his writings talked about the smaller triangles. He said nobody pays attention to them. They don't get any attention, but they're there and they're all over the place and they work just as well. They just don't get the fanfare because they don't generate that big of a move. So sometimes they go overlooked, but smaller triangles are all over the place as well. Obviously, a smaller triangle is not going to work with our strangle strategy, the way we do it. Just not enough of a movement, but the triangles are still Elliott wave, and they're still there, and they're still fun to watch and see them just do what they're supposed to do time after time. So that's a little bit of a triangle forming with an overbought condition is absolutely, completely normal stuff going on. The ADX is only broken above 30, so plenty of room to move there. You can see back here that certainly has much higher to go. The positive directional indicators come down a little bit with this consolidation, and that's not surprising either. two positive things to look at with the positive directional indicator and the negative directional indicator is the fact that the separation is still good and the negative directional indicator is moving down. So even though the positive one moved down, so did the negative. So this was just calm with the consolidation. This was not buyers giving way and sellers increasing. None of that's going on. So this looks great as far as continuing to move up to our price target there. Right around 8, where the wave 5 target is. So hasn't done a whole lot since last week other than that first day. But other than that, it's been hanging in there with the craziness that's occurred in the market. So I would call that a win in itself. All right, so that's our past ones. Let's go see if we can find a new one. And what I wanted to show you, I kind of briefly mentioned this to you a few minutes ago, but look at what's been added in here on Profit Source. If you believe in trading Elliott Wave and you haven't gotten Profit Source yet, yeah, you might want to consider. I mean, all these really cool things that they're adding are just making it better and better. And you can see here that we have a wave 3 bearish first day and wave 3 bullish first day. So what the programmers have done is they've set a way to find those that have moved into the wave 3 the first day. So the first day that the Elliott Wave algorithm, because remember, Profit Source uses Ralph Nelson Elliott's actual algorithm. I've seen the algorithm. I don't understand it. I don't want to understand it. It's at least 20 pages, front and back of coding. So if you're mathematically inclined or understand coding and stuff like that, then formulas and all that, then you'd have a field day. You'd probably love it. I don't understand any of what it means and don't want to. I just want to hit a button like this and have it show me the labeling. So where it says wave 3 bullish and bearish, that means the first day the software labels that. So the first day it's labeled as a wave 3. Now, whether it's wave 3 to the upside or the downside, it shows up in the search result. That's brand new. And so there's all kinds of really cool things that are still, I mean, this is the stuff that's just being added to it, but there's other stuff that's coming too. And you can see that the momentum scan that I've been talking to you about, finding lower dollar stocks, but doing it in a little bit more of a responsible manner than just trying to stick it to the man and find those with heavy short interest and let's all gang up on them. Let's do it with good, solid technical patterns. So there you go. And then, so here's these things have been added too with those that show up the first day. So what I wanted to show you is, look, on the wave 3 bearish, there's 5. Wave 3 bullish, there's only 3. So remember when I was saying that, and this goes right into the zigzag mastery class too, because one of the great things that I like about zigzags is you can do them in the wave 3. Well, now if we start to see the wave 3 forming early, well, what if what if there's a zigzag in the 1, 2, and then the 3 is the extension? How cool would that be? Where you can start to find extended, even if you don't find an extended wave 3, even if it only goes to its target, you can picture that, right? 1, 2, and then 3 as a zigzag. So that's all kind of cool stuff that we're going to be talking about. But my point here is that, look, there's already 5 that are starting in a wave 3 to the downside, which furthers my point that if the 381 doesn't hold, yeah, we're going to have to do some things with our bullish alerts that we have now, but there's plenty of stuff that's ready to go to the downside, and trading the downside is far more fun. I always hesitate to say this, and I don't say it more often because you kind of feel bad because so many people's retirements are tied to IRAs, 401ks. So in general terms, we just want the market to go up, right? Because everybody benefits, even people that aren't traders, even people that aren't trading options, they benefit through those programs when it goes up. So it's better for everybody when it goes to the upside. But if you're a trader and you're specifically an options trader, the market moving to the downside doesn't scare you at all. In fact, you start salivating because you can make a lot of gains in a very short period of time. So we'll eventually get there, whether it breaks it now or goes to 420 or higher and then breaks and we start down. The market will correct at some point in time, and when it does, we'll be there. And now we have another cool tool. So even if it breaks now or later, we'll be in good shape to move forward. So as you can see here on the bullish impulse, which is my search looking for bullish stocks to the upside, there's only one. And so we can look at this with the bullish wave 3 and see if that one is by chance in a wave 3, and it's not. Oh, it is. So it did show up. So, well, this is good. Let's see what this is. Fix. Comfort Systems. I'll bring that DMI back. Oscillator looks good. We had a little bit of a move, and then we came back down with this little loop that occurred right here in the chart. See that? Moved up, little loop back down, and it didn't fill that gap. That's frustrating to get that close and not close that gap, because then that makes you wonder, well, how far is it going to go before it closes it? Well, it went quite a ways before it closed this one back here in October, and that could happen again. But it just, it just takes that one little worry, I guess, if you will, out of it if it would have already closed it. But you could argue that it came down and tested this level, which clearly the 60 level has acted as resistance and now support. There's no doubt about that. So it tested that a couple of times, tested it back there in the middle of February, and then again here on the 26th. And now we're moving back to the upside, and it looks poised. I mean, the ADX is trying to curl back up. The two directional indicators are separating and moving in the right direction. I mean, it's the only one we got to look at from my search, but it could be a good one. Let's see. Let's see what the options look like. It's not very liquid. Man, we see that a lot lately, haven't we? Liquidity is confined to certain areas. It's not zero, so there is activity, but the spreads are very wide. There's no options between April and July, so there's no May or June. It's in the cycle that skips from, which I hate this cycle. June is a really good month to put on option trades right now. So when they're in this April-July cycle, it's not as attractive, but yeah, even though there's a few contracts, the spreads are just too wide. I'm talking about a bid of 205 and an ask of 660 wide. That's what I mean by they're too wide. So they're $4.55 wide. That can't work. So that's why we often say this, and we talk about this in our new subscriber call too. We have a call that we do with our brand new subscribers to kind of get them accustomed to our methodology, the way we do things, and we talk about the fact that putting on a trade, an options trade, is equal parts options to technical analysis. Elliott wave gets the fanfare because it's the cool stuff, right? Figuring out where it's going to go and when and all that kind of stuff. And those things are that's the sexy part of trading. But you got to analyze the options too, and you can't just put on a trade that has a spread that wide. You're basically throwing your profit away. You have no chance to make a profit then. All of it would go to slippage, because remember, you're going to have that same spread getting out. So you can say, well, I would just go ahead and pay it. I've had people say this before. Well, I'll just go ahead and pay it because I'm going to make money anyway if it goes up and hits its target. But remember that spread will be just as wide when you go to get out. So you're going to pay it twice, and it's almost impossible then, unless it was, a massive run in the stock. But that's a fantastic pattern. So that's frustrating. Now let's go back and let's take a look at consolidating stocks, because that makes a lot of sense right now, doesn't it? Let's see what's consolidating, if there's some in the wave 3. Jack in the box. How about that? So dividend growth. It's interesting because there's a lot of people talking about that being a good place to hide as well. You can see that ADX has dived down. I'm not sure what the correct English there is diving down, I think works. And then we have an expanding triangle right here with the wave 3. We have, look at this, really nice in the oscillator. We have some people talk about, well, you don't talk about the oscillator a lot. You're right, we don't, but it is factored into the search. So it's not that ignore the oscillator. It is part of our technical analysis system. Just tend not to talk about it a whole lot. But there you can see that where you've had this, each time this has moved to the upside. So we went boom here. This is not what you want to see for something to continue higher from here. So each time this has made a new high, the oscillator has made a new low. Now that's the definition of divergence there. So they're going like this, right? So every time we made a new high here, it was weaker and weaker and weaker. So when you look at that, that one would be a difficult one for me because of that, to show that we would want to go directional here. But looking for non-directional, like a strangle, it's just not quite wide enough. So 45 to 40, it's only 2 points wide. That would be the trade, one of our strangles here. But it's just, I don't think it's quite wide enough. But with that divergence, it's probably going to make a break at some time in the not too distant future. So let's go back and see if we can get a little better triangle out of one of these two. This is the anti-triangle pattern here, because this is a trading range. So resistance, support, resistance, support. That's the exact opposite of what we want to do for one of our strangles, because this could continue. You see the snaking pattern of the two directional indicators. I know I talk a lot about the fact that I don't like doing at the money butterflies because I don't like sideways trading. But if you were looking for something to do with an at the money butterfly, you would want to see this kind of stuff here with those, the two directional indicators making like that snaking. You know, it almost looks like one of those finger things, right? Where you stick your finger in it, your finger gets stuck and can get it out. That kind of a pattern on it is good for non-directional sideways stuff. The oscillator is showing a little bit of life here. We're testing that previous high from February, so maybe it is going to break out to the upside here, but I don't like the pattern for, well, this is one done before. So it caught my eye immediately, ODFL, Old Dominion Freight, hoping that this is a nice pattern because I've had success with this in the past. And it's trying to break out already. So the oscillator is moving up. The ADX is moving up. There's a little bit of separation gaining. So it's trying to break out. You can see it's got an ascending triangle here. And that's what I mean. It's trying to break out already. So this is where the decision comes. Well, do we do a strangle out of this, or do we just wait and just trade it directionally to the upside if it continues that break? Because you see that movement, and it broke out today. You could almost argue that it broke out yesterday and today was a confirmation day, and it would be hard to argue with that for a couple of reasons. One, it broke this high, the high of the bar from the 25th, and it closed above that. So that could count as a breakout day, and today being follow through. So from that standpoint, it might, let's just see what happens in tomorrow's trade and just put a directional trade on this. It doesn't show up on the directional search because the ADX is too low, but it's getting there. And, you know, let's make a note of that one. So I don't know that I would actually go as far as to say, I mean, we would have to qualify it because of it's right on the verge there of showing that it's breaking out. It's just, it's hard to put a strangle on something that's kind of already broken out. But I would actually want to see where it opened tomorrow is before going on a full-fledged directional trade either. That's why I'm saying it needs qualification. So we are definitely going to come back and look at this one again next week. and see. Well, spreads are a little wide on this one too. I wonder if they'll narrow in. Nothing like the last one I talked about, but out to July. It's the same April, July time frame again. That cycle. So anyway, let's look at that one as far as upward based on tomorrow's trade. See if we can find something else to make our official case study for tonight. Then we'll take a few questions before we wrap things up. Why don't we just see if we've got any consolidating? They're in a bearish wave 3. Well, it would have been nice, but that's just, there's not really a pattern there. I mean, as far as the consolidation pattern is what I'm talking about, thinking out loud here. Obviously, we want some sort of a triangle pattern to do a strangle, but one doesn't really exist. All right, so let's see if there's anything under the new search. Yeah, take all these other buttons off. There we go. Puke. How do you have a symbol puke? Well, there's a really nice zigzag there. And it's still, look at that. Let's see if puke has options. Maybe it'd be more polite to call it puck, right? More fun to call it puke, though. Another one with extraordinarily wide option spreads in the options. Oh, that would have been a lot of fun to do that one. I think there's a great chance that, look at that, 100% on the C wave of the zigzag, dead smack in the tap box for the wave 5. Man, you like it when you see that, but you got to be able to trade it. And you just can't. Frustrating. We got to get even more people trading options. Just continue to add to liquidity. Man, you have no idea how much better it is than it used to be trading. Some of you guys, yeah, going back to, I've been around so long. I was trading back when I used Investors Business Daily newspaper. I had a whole big stack of them behind my desk. That's how you traded. And then you called in your trades. There was none of this online stuff and really cool charting programs. And it was a lot different world back then. Commissions were $100 a trade in and out. This has really good support here. Right there, it basically tested that wave 2, and it's talking about different ways of testing. This is one that you talk about where there's a low, then it made a higher low, and then it made another higher low. So it tested the bottom a couple times, each time making a higher low. That's a good sign as far as it wanting to move to the upside from there. Well, that looks really good too. ADX is not quite high enough, but well, if you went out to June, at least this has June, there is a strike in June that doesn't have ridiculously wide spreads, but they're pretty wide as well. But let's go ahead and use that one, and then I'll get to a few questions here and wrap things up as it's getting towards the end. So WERN that's going to be our case study with special attention given to what happens with ODFL tomorrow. And tomorrow's another update, and that could qualify as a directional trade as well. So that's where we are, and we'll stop. Won't look at Walmart anymore. All right, so with that, let's see if we get some questions. Brian, you went to the gun store outside of St. Louis and you can't, what, it broke off. So, I mean, remember when we looked at the one POW? Should we look at that again? That was ammo. And back to the upside again today. Dang, that's a good pattern. And the ADX is not qualifying, but look what happened. See these two? This is a really good example of what you hear me talk about this a lot, when the two directional indicators move together, and then I call it kissing. They come together and then they go apart, and they come together and they go apart. You know, they like right here with that one moving down and that one moving up, it just looks like they're going to cross, doesn't it? But they don't. They get close and then they go back the other way. It's just a weird phenomenon that happens in these directional indicators a lot. Same thing happened here. It looks like they're going to cross and then they just get close and diverge away. So it's spreading back the right way. You know, the two directional indicators are far more responsive than the ADX. The ADX is slower, takes longer to curve, but that actually looks really good there. Did we look at options when this was brought up before? Do you remember? Let's take a look real quick. That looks as good as, well, there's some liquidity there. So there you go. Thanks for that, Brian. I don't think that's a very positive thing you were sharing there, or at least your intent was that things are getting scary out there. I think it's what I was going to, but man, looking at Powell was good. Georgie, if I didn't know better, I'd think you wanted me to look at AMD. I mean, have we ever had an event where we haven't looked at AMD? We look at it every single time. So the ADX is curling up with the sellers in control, but it does seem that some of that has calmed down a bit. The CCI is pretty low, and it's way down here. And my point being that it's starting to look like the downside has gotten a bit tired here. You know, the wave 5 completed, but remember it was a 229% extension, so your target is not the previous 4. It's a 61%. I mean, your first target is 38 and then 61% on the corrective levels. Let's see where that went. It might have done that already. Yeah, see, it already corrected 38%. And then it tested that. So that may be all that it does. It may not go to 61.8, although there's a couple gaps there that could get filled. But see that? See how it came right? I'll put that back on there. This is good educational stuff. When you have a wave 5 that extends more than 100%, you don't look for the retracement to the previous 4. First stop is 38.2%. If it breaks that, then it's 61.8. But it tested that 38.2 twice and held it. So that could be the end of it. So maybe things are starting to look a little better for AMD. I mean, we talk about NEO a lot, and I mean, their earnings report was great. The only thing that's holding them back is they can't get enough chips. So, you know, they're in demand. And we talked about this before, that they were doing well, and then Intel's news had kind of stopped them in their tracks. But maybe we're starting to build a pattern where it looks like you could turn and go back to the upside. It seems like limited risk to the downside with as low as that CCI is down here in the minus area and down at the lowest areas that it's been for a while. So it just looks like the downward momentum is waned on that one. NNDM. NNDM. Big old run. that was doing great and then went vertical. How many times have you heard me say this? But I know we have new people every week, so I go over it again. But I like 45-degree angle moves. Look how that held. This is why I like it, because the corrective moves are minor. Everything goes up and corrects. That's the backbone of Elliott wave, right? You have impulses and corrections, even in directional moves. But when you have a 45-degree angle move, the corrective moves are not severe, and the upward trend or the downward trend, whichever holds. But then when things turn and go vertical, what goes straight up quite often comes straight back down. And this is why I stay away from this stuff, because I know this is what's going to happen. It tried to run back and it tested that peak. It gave you a second chance to get out of that vertical move, and then it's back down here. Now, the solid thing is it's at a wave 4 corrective move that's right at 50%. And it's also right where that little triangle was. So you use the lower line of that triangle and the upper line here. That's a nice ascending triangle, but then it went vertical, so it didn't hold and it came back down. Could be getting ready to try it again. That actually looks pretty interesting. I'll make a note of that and see what that does next week as well. You need that wave 4 to hold. That's going to be the key there. Carrie, is the volume in VTV due to the beginning of the month insertion of capital, especially into an ETF? Likely part of it. But I also think it's market rotation too. I don't think it's just that. I think things are rotating that way. That's why we added it. Even if we bounce off and everything. Let me talk. I meant to bring this up. I'm glad you asked, Gary, because I meant to bring this up when I talked about VTV. You know, if we're watching this and we weren't getting a follow through today, why are we adding new stuff? Well, VTV, we can do well because of market rotation. If the market goes to the upside, it's also where money will go to hide if the market moves to the downside. So it could perform well regardless of what the market does, which is kind of what we want to see right now, right? We're trying to find, you know, the triangles, and there haven't been a whole lot of really good ones, or we would have been loading up on those with sitting here. If you're wondering, well, why aren't we sending out more triangles? Well, we would if we could find good ones. So can I look at NEO? No, I just talked about what their issue is supply. There's nothing. I mean, they delivered a ton of cars. Their forecast was good. It's not Nino. Feels like Nino, doesn't it? It feels like El Nino. Freudian slip there. But it moved to the downside because of that. I mean, it's just they could make cars faster if they had parts. So it's right at a point where it needs to hold its support here, and it's oversold as well. So this is an area where, I mean, it's basically come back to the previous 4. If it were to break here, it gets super ugly, which would be fun to trade. But if you're long, and we are as well, you want this to hold. Because if it doesn't hold, then we flip and we trade to the downside, which could be fun. Like I said, I mean, it goes down all the way to 20, it gets cut in half. Stock gets cut in half. So there's a quick double right there. And even more with the liquidity of options. Yeah, Rowena, I just went through that, and I know you had asked that before. I covered it, but yes, you were 100% correct. Apple, Amazon, Neo. So we'll do a couple of those. We already did Neo, so let's do Apple. Jesse, I don't draw the hypothetical wave 4s and 5s. Those are actually targets. The software does it. So it should be automatic in the software. Well, Profit Source anyway. And those are targets. Basically, what it says, like, okay, if we're in a wave 3, if the wave 3 were to end today, that's where the wave 4 target's likely to be. And from there, this is where the wave 5 target is likely to be. So I don't do it. It's automated. I just hit a button and it does it automatically. Apple, I think, is great. I think you know, if you're looking for another stock that's similar to VTV, you know, it's tech, right? But it's also value, because of its valuation is one of the lowest in the market, and they've got tons of cash, and we all know that. So it moved up above the 10-day moving average yesterday, gave it back today, but you can see why. It's got to get through the 50-day moving average too. And if it does, the 50 and 30 are right there, then I think it runs up rather quickly. And I think this could be a leader, maybe one of the old guard that could be a leader as well if the market does indeed bounce from the upside here. So let's look at PLTR. So looking at the Elliott wave pattern here, so wave 5 that's completed. That one did have right at 100% extension. So now you do look for the correction back to the previous 4. So that's the standard Elliott wave. When the wave 5 is at 100% or less, you expect a correction back down to the previous. This is all educational stuff on our website, by the way. If you haven't read everything, if you haven't, I mean, we spent a great deal of time putting together really, really quality educational material. If you really want to learn this, then get on there and do your homework, and this stuff will become second nature to you. We filter out all the stuff you don't need to know, because Elliott wave is, I mean, the guy he would label stuff that you might see one of it 1,000 times. It's not worth knowing. It's not worth spending your time learning something that you're hardly ever going to see. So we filter all that stuff out and give you the core stuff. That's why we call it the core concepts. So anyway, Plantier looks like it could be setting up. Maybe it wants to try again here. It's completed. You see a really nice zigzag. This turned out to be really classic Elliott wave stuff here. Look at this. Zigzag here, boom. Look at that. Look at that. It doesn't get any better than that. Zigzag mastery. If you haven't signed up, look, there you go. Right here to the 100% extension, right where the previous 4 was. Elliott wave all over this stock. So you could keep an eye on this one. We'll make a note of it as far as, a little bit of a turn back to the upside. Say that because it's completed what it needs to do here, but it needs to hold here. It has to hold here. If it doesn't hold here, it starts over. It goes all the way back. It retraces everything back down to 10. So it's got to hold right here. And institutions know that. I think they're going to try to support it. I'd be surprised if they don't. Steve wants to look at 5. FIVE, and then we're gonna wrap this up. I know I talked a lot and we didn't leave a lot of time for this, but just come back next week and we'll do some more of this. 5 below that. Man, that ADX just isn't quite low enough. I was like, well, why isn't this one showing up on the search? Because that's as good as anything that's out there. This could go into, or maybe into our high value one. I have to look and see how expensive the options are. But that's a wonderful ascending triangle. It's great. It's just the ADX hasn't been low enough. That's why it didn't show up yet. But we'll see what the options look like. Good spot. Steve, that's good. Nice looking pattern. Yeah, they're a bit expensive and the spreads are a bit wide. Yeah, that would have to go into our high value one, but that looks good. That's a good looking pattern. I would like to see the ADX just a few points lower. It may not get there though, because it's right into the point. And so you were asking about a breakout above 200. And so if we put the Elliott wave pattern on, yeah, that could be a great wave 5 extension. I mean, you could be right. It could very well break to the upside. It only corrected 20. It only went to the first fib level. And Elliott, even though admitting that that's a corrective level, it's a Fibonacci level, he would talk about in his mind, it's not, it's more of a continuation wave. It counts as a correction and support can be found there, but it's more of a continuation of the current wave. So what I would expect to see here, let's just see how it plays out. Here's what I would expect to see based on what I got from his writings is that this, if it does break out to the upside, it breaks out, continues to run, and that 5 relabels to a 3. That's what I think will happen. But it's got to break to the upside. It could easily break to the downside because it's in such a nice triangle formation. I mean, that's a beautiful one. That's a classic Elliott wave triangle right there, I bet. Let's see. Man, look at that. So anyway, that's, keep an eye on it. Let's see what happens with that. But I think that's it. And then JBHT, and then we're going to call it a night. I'm sorry. I know we didn't get to as many of these as you'd like, but next week, I promise we'll do more of this. All right, so it's pretty good. Another one with a really nice triangle formation. It's more volatile than normal. I had mixed success with this stock over the years. Sometimes it broke really quickly, and other times it took a while. Man, it's not liquid anymore. It's interesting. Some of these things that are coming up are stocks that I've traded over the years, doing this so long. And some of the ones that used to be liquid aren't liquid anymore. Like this, we couldn't trade this anyway. The spreads are too wide. The spreads are just really wide. If you went the opposite of what we do, if you went deep in the money, then you could, which makes sense, right? Because you take all the extrinsic value away, which is where the width of the spread comes in. Maybe it tightens up during the day. I don't know. Stevie might know better than me, but that's going to be hard to trade if the spreads stay like this during the trading day. They're so wide. All right, everybody. Thanks for your attention. As always, we really appreciate your time. We value it. Time is, the most precious thing we all have. So thanks again. Don't forget to sign up. Last chance, Zigzag Mastery. Have a great week. See you next week.